This is the MTPredictor weekly market update for June 15th. It is Father's Day, so happy Father's Day to all the fathers out there. I'm going to take a look at a few things today. Here's the S&P 500 on the weekly chart here, and you see that S&P it's taken out our weekly decision point resistance level. Market's been very, very strong, very extremely bullish, if you will. So if you are long, you should be trailing with some type of trailing stop with the market on your portfolio, or because we are at some extreme levels. And I just want to kind of go back here. We had from this low back in 2002 to 2009, you had a 7-year period here. And you've got 7 years here from 2007 to where we are in 2014, another 7-year bull run here. Now, bull markets don't last forever. Obviously, we know this. That's what makes the chart go up and down here like this. But what we don't know, what we haven't had, this is where we started the quantitative easing. This is where we've had the money printing, where the market's being propped up. We haven't seen that before to this degree in history. Obviously, in '71, when Nixon took us off the gold standard, that was a game changer because we allowed to deficit spend, into oblivion here. I mean, at some point, will come to an end, and it probably won't be very pretty. But this is what's happening with the market. It's where are you going to put in a zero or negative interest rates now if you're in Europe world? Where are you going to put your money? Well, you're going to have to take risks to get a return, and that money is coming into the stock market. There's just no way of getting around it. Historically, when interest rates are low, as I say, stocks will grow. And when interest rates are at 2.5% or less, inflation at 2.5% or less, then the average return for the market is about 15%. Over the last 50 years anyway. So this is the environment that we're in, and you just can't fight that. Trying to pick a top here is going to be very, very difficult because we're in uncharted territory, number one, but also let's check the pattern here, and you see the 5-wave pattern. We're in an environment of this quantitative easing. You have some tapering, but the tapering is only a certain percentage of the quantitative easing that's happening. So we're not. This is kind of new territory in terms of what we're dealing with. We'd anticipate, in fact, if we go back here, this kind of broadening formation in the S&P, where we're getting higher highs and lower lows. That megaphone type pattern is usually very bearish, but sometimes, and you see they've taken out the top here of that trend line, and it's become a very bullish breakout in the S&P. Now, if we look at the Dow here, this is from a bar chart. This is the Dow Industrial Average, and you can see it's a little better formation here, where the Dow is up in the area of its long-term trend line, the top line here. So again, something that we'd normally take note and say, or we hit resistance here, we should expect selling to come in, and you can see the selling, it's been hard when it's reached the resistance level, and on the other end, we've had a lot of buying there in 2002, and then again in 2009, again that 7-year period. Again, we're 7 years into this between the two highs here. So I'm not, trying to call a top here is going to be quite different, but let's look at a few things here. So on that weekly chart here, again, we do have a 5-wave pattern up, and when we have these patterns, now we're kind of in between levels here. Here's the minimum wave 5. We breached that. Made a high here, took that high out last week, and did close with sellers overcoming buyers at the end of the week. But there's the typical wave 5 target here, and that will start, well, in the S&P, the cash that is around 1965, 1966. Will begin that resistance level there. All right, so that means that we could see a correction back to the wave 4 DP. That's the tendency. Back to this level just below 1800 in the cash. If we go back to the lows of 2009, you can see again the pattern was this nice 5-wave pattern. The initial correction back to the wave 4 DP. It's the same pattern. It repeats over and over and over again. Again, if we look here was the 2010 high there, right in the minimum wave 5 target, with a correction back to the wave 4 DP here. So things were quite orderly. Here's another 5. Actually, this unfolded as an ABC, but we had a signal here that called for a potential top here. The futures had a 5-wave pattern here. This was a little 3-wave pattern. That correction there. All right. This was a 5-wave pattern. But what began to happen is this reached the typical wave 5, which we hadn't seen in a while, and the correction was shallow here. It did correct, but it was shallow, didn't reach all the way. And this is where we've breached now the weekly resistance, and here's where we are currently. So again, we're in an area we anticipate we should get a correction, but the market has been very strong. If we look at the if I'm going to pull up the on balance volume here, just see is volume following price. Okay, and so far it is. You know, we've made a new high here in the volume on the OBV, following the new high in price. And so, you know, if we start to see divergence between the OBV and price, that might be a sign, something to look for there. All right, let's look at some of the other markets now. We've started to get some movement in the commodities here. This is gold. You know, this is the weekly chart, and you see we had this was a wave 4 here. All right, so we anticipated selling coming in. We had a sell signal there. This was the target here. It didn't quite reach the target on the sell-off here into the wave 5, just shy of that target when this little buy signal came in. But we reached some daily resistance here, sold off. But you know, we've got this situation in Iraq, and this is an interesting situation. In fact, let me look at oil here. So in Iraq, these insurgents have taken over a couple of cities. Don't know what we're going to do about that, but if they do get control of the oil fields, remember this is oil, and we've got this really long, like 5-year consolidation pattern. Let me put some more data on this in oil. All right, so this, let's go back to this high here. It was back in 2009. All right, so about 5 years of consolidation, one of the longest, I think, consolidation periods that we've seen in oil. Now it's, you know, from that 80 to 110, basically, with an occasional spike up to 120, which reversed very, very quickly within the week, back inside that 110 to 80 level. All right, so we close around 106, almost 107. In the CL here. Just going to take a decision point off of this, a weekly decision point here. Alright, so we'll see this week. It came into some resistance, closed above that level. If they take that high out, chances are we're going to this next resistance level here, up around 115. Make this a little bigger. Alright, but the point now is, with this situation in Iraq, okay, obviously oil's, you know, got some pop on that. If we allow the insurgents to get control of the oil fields, then, you know, we've been talking about this consolidation. This has stored up a lot of energy. in here, and that this thing is going to break one way or the other. All right, if we lose control in Iraq and the oil fields get taken over by the insurgents, then those obviously are not friendlies of the U.S. Then I think you're going to see oil and gas prices. We're going to see challenging the highs back here. All right, so I don't know what they're going to do, what's going to be done there and so forth, but obviously it's going to have an impact on oil, and maybe it's a catalyst that makes this thing break out of this range at some point, and it could be a huge move. We've seen gold and silver rallying on that. Let's just look at silver. June is usually a seasonally weak period for the metals, and let's find my silver chart here. And it was looking good in terms of us being able to maybe get down to that 1760 level target. In silver, you can see, just go back here, I guess it's worth kind of going through the steps here. So we had the 5-wave pattern up into those previous highs there. Again, we anticipate a correction back to the wave 4 DP. That's where we are. That's where the low was put in silver. This is a major area of support. If it holds as support, then the trend which was up prior should continue up. We should start a new bull market in this at some point. We could consolidate around, but whatever events going on overseas and here as well, obviously are going to affect this. If this area gives way as support, if this support gives way, then we find wave 1, we go to the bottom of wave 1, we take a decision point off of wave 1, and that maybe puts silver back down around that $5 level. All right, don't see that happening unless we get control of government gets control of things, not just here but abroad. Central banks get control of things. If not, then I think this is why if you're buying physical silver, these are good opportunities probably to buy, holding as insurance, if you will, against reckless governments and central banks and so forth, and all the other stuff. We talk about is there inflation, isn't there inflation? Well, food, you can see there's just been about a 22% increase in food prices. But there's things like technology that those prices are down on computers and things like that. So you've got a mix there. But if there is trouble, two things that move twice as fast as anything else will be food and energy. And of course, those are the things the government doesn't count in their when they their CPI. They remove food and energy because those are supposedly the most volatile things, but those are the most important things in a crisis. Food and energy, especially food, and those prices are going to move up twice as fast as anything else. So watch oil, watch the situation in Iraq. It's going to be tricky. I don't know how we're going to respond, but how we respond may have a big impact on, or how we don't respond will have a big impact on what's going on here. Let's look at the VIX. So anyway, I just want to kind of get back to silver here for a second. Sorry. So we see silver has rallied. I bought some around 1907. That's the physical metal, having it stored. I bought some more down there. I wish I had bought more now. I just was hoping to see those lows in gold and silver. About 4 out of 5 times over the last several or the last bull markets that have come to an end, and in those bear markets that have come to an end have been in June for gold, middle of June. Here we are in the middle of June now, and so even though it's a seasonally weak period, usually if the low, the lows have been put in by now, and so it's going to be a little tricky here. We'll see. We'll see if this is just a kind of news-driven market being a little skittish, and things will settle down, maybe roll over again. but this is a potential wave 5 target here. If we hit, would be a good buying opportunity, I think, there. If we can kind of take out the lows, clear that stuff out, that might be a good buying opportunity. Otherwise, like I said, I bought some here. I've been buying in here. I'm getting ready to buy more. I just, sometimes it's going to be a little difficult to pick a bottom here, especially with stuff going on other parts of the world that obviously can affect prices in a major way. All right, the other thing I want to look at, and then maybe we'll wrap up, is the VIX. Actually, I'll use this chart. Let's look at the VIX, because we've looked at this. I look at it every week, but I don't always show it in the weekly market update. The last time we looked at the VIX, we had a there it is. We had a decision point buy signal on the VIX, and we were anticipating an increase in volatility. We did get that. You can see now we've pulled back down. If I'm going to scrunch this chart up, you can see these are the lows back in 2007. I think if we go back to 2004, you're down in here as well. I'll add a little more data to this. Just see if it'll go back any further, this data feed. Yeah, so you can see here. All right, so this is inversely correlated to the stock market. So here, the VIX at all-time lows here. That was before the market crashed. So when that was the stock market was at all-time highs. Here's your crash of 2008, your bottom in 2009 when the VIX peaked in here, and the stock market formed a bottom there, and here's where we are. So we're very close to those all-time lows, or at least going back to 2004. Last 10 years that we've seen. All right, VIX has been coming down, so that volatility has been coming down. Obviously the market's been going up, but we get back down into, if we do, around that 10 in the VIX, then that's another sign the market may be topping. So we're pretty close. If I take a decision point off of this decision point here, there's the level of support right in that area. If we see this level, I would definitely be wary of a top in stocks. Right, that would be a little too complacent. You see, this comes back in that the market is people are getting very complacent. When that happens, then you get those spikes. All right, so this is going to be interesting, I think, how this stuff unfolds here. Markets at all-time highs with quantitative easing fueling these things. Negative interest rates in other parts of the world. You had the Pope come out and say that the world economy is in trouble. Donald Trump says that America is heading for financial ruin. These are people that a lot of people listen to, and so with the situation in Iraq, it's just very unsettling. How that's going to be dealt with, or like I said, or not dealt with, may be a major catalyst in oil prices. It's been in a major consolidation, but all that can change. This week should be interesting as well, because we've got a Fed meeting. Begins on Tuesday. The announcement on interest rates will be on Wednesday. Obviously, the Fed forecast and press conference and all that afterwards also can be market movers. Don't expect a move in interest rates. So if there is a move in interest rates, there'll certainly be a huge move in the market, but don't anticipate that. And then it's a options expiration, but a quadruple witching options expiration. Markets do like to rally into options expiration about 70% of the time, but this may get thrown off a little bit because you've got quad witching right after the Fed announcement. So it might be a little more choppy than just a straight rally here. So we'll see. Giving you some things to kind of watch for. It'll be very difficult to pick a top here, but I think if you see the VIX come down into this level, boy, that's you really got to be cautious about being long stock at that point. Watch that on balance volume if you use that. see if there's any divergence, if volume is not following price any longer. Again, gold and silver, keep an eye on those. See if maybe a bottom gets put in this summer. Maybe it's in June here. I was hoping for a little more rollover there to the downside. I don't know if we're going to get it, so I've been scaling in. Like I said, just personally, I'm getting ready to buy more. I may not get the bottom that I want, but it is what it is. So we'll come back next week. It should be an interesting week to get this Fed meeting out of the way and see what we get after options expiration next week. All right, so enjoy the rest of the trading week. Take care. We'll see you back